So Vetri, let's understand that 3 years out, which are the sectors which you think can give a 12 to 15% compounded growth?
Honestly, Nikunj, that's not an easy one because 12% I would say is sort of the long-term number that we would build into equity portfolio outcomes. And given where we are in terms of valuation, the large cap valuations are reasonable. I won't say they're attractive, they are reasonable. So maybe in the large caps, you could talk about a 12% trajectory, but perhaps it could be slightly lower than that. And where I would be quite concerned is on the mid and small caps, because over there the valuations are still very, very rich. And relative to that 12% number, I think the outcomes can be disappointing. The one sector where we do think there is scope for absolute positive returns, I don't know about 12 or 15%, but that would be the banking and finance sector where we think the balance sheets are strong. The scope for growth remains good. Lot of negative news around, but that's why you're getting the valuations at an attractive level. And cheap valuations determine the outcomes a lot more than narrative. So that's the one sector that what I would be willing, quite happy to sort of back for absolute returns right now.
Where are you on these big themes? Energy transition, EV transition, everything in the solar world is getting re-rated like their consumer names. Is there excitement and is there a bubble in making in some of these energy so-called themes?
I think it comes back to understanding what exactly drives the long-term competitiveness of these businesses. If all you're doing is putting capital together, to buy equipment, there is no technology element to that, then you're a pure utility. If you're a pure utility, then eventually I'm pretty much contrarian here because most people these days are happy to pay a P multiple for utility stocks. But I've learned the hard way that in the utility business, what you can pay is really price to book, because eventually the regulations cap the ROE potential of those businesses. So I'm surprised by the fact that the stock of energy transition in companies which are going to have to invest significant amounts of capital just to stay relevant, people are now willing to pay such a big premium. I won't say we can completely ignore that area because, like it or not, the energy transition is going to happen. But I think you've got to pick your names and be a little bit slow over there. I think there'll be better buying opportunities in terms of valuations, is the way I would describe it.
Vetri, everybody is excited about banks. I mean, that is one space where there's a consensus view of comfort and growth. But that consensus view is just not helping investors because banks have been in this hibernation, at least the private boys, for 3 years now. Do you think 2025 could be that turn for the banks?
Again, I'm not good at predicting, exact dates when these things turn, but I've been horribly wrong about mid and small caps, which I've still done spectacularly year to date. Hasn't changed the fact that I was negative about them a year ago. I've been positive on banks for this entire year. They haven't done anything, but that's perfectly fine. When you think about this investing journey, it's about 3 years and 5 years. And believe me, Nikunjan, those journeys, what matters more than anything else is, are you getting solid companies at reasonable valuations? If you do that take care of a lot of the risks associated with investing. So I'm very comfortable being wrong. Some of my best investments, sectoral, thematic, stock level, have had my best outcomes over 5 years and 10 years. But for the first year, maybe even 2 years, I was horribly wrong and contrarian. But I'm fine with that because I'm in this for the much longer term.
Fair point. Okay, Vetri, good to have you on the show and good speaking with you as always.
Thank you.